David Katz is the President and Chief Investment Officer of Matrix Asset Advisors. A lot to talk about today. David, first, congratulations. The Wall Street Journal naming your fund the #1 value fund for that large cap category, I understand.
Yes, thank you very much.
Congratulations today. So let's start with the gross domestic product numbers. What are we supposed to take away from this when the numbers swinged so much in the other direction?
Well, there are a few things. When you have an inventory build like you had today, unless the economy is robust, it means that the next quarter there's probably going to be some inventory suck down, which is going to lower the GDP in the next quarter. The second thing to remember, it's very important, is this all happened before the debt ceiling and the government shutdown. So we think there's a good likelihood that the fourth quarter is going to slow down meaningfully from here. The uncertainty created by the government surely didn't affect the third quarter as much as it's going to affect the fourth quarter. So we would not be jumping up and down in happiness on the third quarter numbers. The economy is in a slow growth recovery mode. We think that will continue. We think that it's clear that the Fed is going to be starting their tapering process sometime in the first quarter, whether it's January or March. It's important to remember you have this additional uncertainty of the government, and is there going to be another shutdown or another debt ceiling debate?
So the message today is to not get overly excited by these numbers, that there's a lot of caution out there.
Well, the market got overly excited, and that's why the market sold off, but we wouldn't.
But it didn't sell off significantly.
Not so much, and the market's going to come to terms with the Fed tapering. It's going to happen. People know that it's going to happen. Last summer, when there was concerns about tapering, stocks sold off, then the market accepted it, and they rallied just as quickly.
So where do you see tapering now taking place? Not the end of this year?
Not in 2013. Probably February, March, April type time frame. We wouldn't expect it in January unless there's a government resolution in the next 2 or 3 weeks.
Okay, so David, what kind of stocks are you looking at right now?
Well, basically, we like the large cap area. We think there are a number of good companies in the energy sector. The financials had a very good year. We think they're poised to have a very good year next year. And old technology, the companies like a Microsoft or a Cisco that are not catching fire or getting anybody excited, or Hewlett Packard, rather than the new technology, Twitter and Facebook type companies, which we do think are pretty overvalued.
Yeah, certainly. So what stock picks are you looking at specifically?
We like Capital One, which is a financial which has done well this year but lagged the group. We think it's going to play a lot of catch-up in the upcoming year. Within energy, we like Devon Energy. They've done all the right things in terms of restructuring the business, yet the stock has not nearly kept up with the group. We think it's worth about $80 to $90. The stock's at about 61.
So you're looking really at value stocks and companies that are established and that are coming back because of the economy right now? You're seeing fundamentals improve here?
Well, the fundamentals are improving, yet the stocks are selling at 11 or 12 times earnings. The overall market's at about 14.5 to 15 times earnings. So if you can get a leader company like a Capital One a few multiple points lower, you're generally going to do pretty well.
Okay. David Katz, thank you.
Great to be here.
Thanks a lot.